Futures are sharply higher this morning. European markets rallying after China denied reports that it was reconsidering its Eurozone debt holdings. Bob Iaccino has an update on futures trading from the CME group. And Geithner's talking. I understand it was kind of hard to figure out what was going on. He had to listen to the questions in German. They had to be translated for him to understand it, and then back into German after he said things. Did anything come out of that, Bob?
I don't know. I mean, those kind of trips, I'm getting less and less reliant on politicians and their sort of grandstanding. I don't know that Europe was waiting for Geithner to come over there and tell them that they should shore up.
Well, they better have been. They better have been, because we're doing quite a bit better over here than they're over there, Bob, and they can learn from.
He's there with his stethoscope translator thing.
So what is on everyone's radar this morning?
Well, I think sometimes people don't realize that shorts are what make the market go up in spikes like this. It's the shorts that cover that have the longs holding their positions and have the people who didn't get in think, well, now I should get in. So it's shorts covering situations like this that give us these spikes and potentially allow them to be sustainable for the day. Obviously, anyone who sold because China was reassessing their euros bought back. Anyone who sold because North Korea was going to attack South Korea bought back. And anybody who was worried about the Spain austerity package and sold bought back. So it's shorts that make the market go up in spikes like this. Otherwise, it would be 10 points a day and probably a more advantageous situation in the long run, but that's the way it would look.
What about everything else, all the other markets? Anything that really, I mean, oil seems to be back in gear. That's probably a good thing, I guess, because it takes away the...
Oil seems to be leading the economy lately.
Yeah.
It's not something that I would trade off of, but literally every time you see the Dow spiking like this, you see oil go up a day or two before that. It almost seems to be leading the pack. They don't seem to be paying much attention to the lost barrels in the Gulf, and I'm not really sure how that's going to affect the supply of oil, but oil seems to be spiking a day or two before the equities do. Once again, not something I'd advise anyone to trade off of, but certainly seems to be an economic growth story in oil.
Well, we're getting, with volatility and volume comes interest in the stock market, and we're all for that. A lot of people
You don't mean
interested
open
again.
interest either. You mean people being interested.
People being interested and following and, ratings, everything.
You're seeing a description, you're seeing a visual description of a trader's market. I mean, there are not investors in this. When you talk about a street investor,
you can't just ignore it on any given day, or could be 1,000 points.
See, Joe, I think people are ignoring it. I really do think they are ignoring it.
I can show you the numbers. I can show you the numbers. I can show you the numbers. They're not
on the volume side.
No, on the rating side.
Oh, well.
How does it affect us?
That's you, Joe.
Are there other things I'd be interested in?
It's you.
Yeah, all right.
To me, we can't be telling people at this stage what's going on from a confidence standpoint, that earnings are going to be stronger, so the stock market's going to go up. We can't tell them economic numbers are stronger because the stock's going to be going up, because they don't believe it. The everyday investor needs to hear that the stocks are going up and that they're going to stay up. And every time we have these volatile moves, great for traders, but it really isn't convincing investors. The close yesterday, the open today, is not convincing your average investor to put more into his 401k and get us back that sort of naturally upward bias that equities have had the last 20 years.
All right, Robert. Thank you. Have a good day. All right, see you later.
You too.